The housing market is turning into a secular growth story. That's according to Jim Cramer. I'm Byron Reacts. Welcome back to the channel. I'm going to be reacting to this Jim Cramer video, Mad Money. I'm sure you've seen him. I actually like a lot of Jim Cramer content. I wouldn't go run out and buy every single stock that he promotes. I would do your own research. I'm certainly not a financial advisor. This particular video, he talks about the real estate market, and that's why I want to cover this one. So let's jump into it. If you appreciate this content, I appreciate you throwing a subscribe and sharing a comment. Let's get into
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet at another piece of extraordinary economic news. And every day it's presented as something dangerous, something negative. Whoa.
I talk about this in other videos. You got to stay away from the headlines. You got to dig deeper. You got to do your own research, because a lot of the headlines are going to bait you in with negativity. They're going to make you believe the world's falling apart. Love that he mentioned that.
Oh, something that will cause real problems down the road. Rather than greeting good news with wonder or maybe even jubilation, we respond with fear because we've forgotten what a rapidly expanding economy looks like. Maybe some people are too young. That includes days like today, where the Dow slipped 71 points, S&P ticked down 0.11%, NASDAQ gained 0.13%. So I'm going to give you the classic example, okay? Lead story in the digital edition of the Wall Street Journal when I woke up today. U.S. existing home prices hit record high in May.
I have a bunch of videos where I'm talking about the new sales versus existing sales. He's absolutely right. Existing sales are up big time. All of the lack of new inventory is pushing those values up as well.
Right, now this piece, like so many others, reads like Exhibit A in the case against Jay Powell, our valiant Fed chairman, who's trying to hold off on raising rates in order to boost job growth even as demand.
Now, if rates do go up, that will be a bad thing for real estate. Usually, if we see 1% of an interest rate hike, that's about 10% drop in value going based off of history.
Is constrained by supply, which makes overall sales look weak. High prices, weak sales, recipe for disaster? Now, wait 1 second. First, Powell recognizes that a booming housing market is actually a good thing, not a bad thing. This is an industry that gives people good-paying jobs, even if they don't have a computer science degree from Stanford. Plus, as I never get tired of telling you, housing punches above its weight in the economy. So you'd much rather have a rising housing market, which is about 10% of the economy, than a faltering housing market. Yet when you read these...
I've actually heard housing is as much as 17% of the GDP. He's saying 10%. So there you go. I don't know where the difference is on that. I believe it's closer to the 17. And I love that he's going here because nobody talks about this. Nobody talks about all the jobs real estate creates. Think about how hard it is right now to get an electrician, a plumber, an HVAC, anybody that services the home to call you back. They are all busy. They're all flat out. This is creating a need for jobs in our service providers, in our trades, right? You don't have to go to college to get a job. In fact, you can be paid a lot more money if you go into the trades today. I'd encourage any young people that are thinking about their job, thinking about getting into high school, thinking about college, to consider a trade. There's a huge demand for people that want to get into those fields. And the real estate market, the hot real estate market, is creating a ton of jobs for those people.
Headlines about home prices hitting new records. They're almost always written like an arbinger of bad times, like the economy must be overheating because of housing. So is this industry the enemy when it's good? Something that must be tamed, lest we end up with Weimar Republic-style hyperinflation, this time with wheelbarrows full of greenbacks and not Deutschmarks?
Everybody thinks that just because the housing market created the last recession, and it was really the mortgage crisis, right? It was really the banks caused the last bubble and the last recession, the big recession of 2005, 2006, 2007, after that with housing. Everybody thinks that's just going to repeat itself because the market's high. Two completely different markets right now.
I think this is a good time to give you some context beyond the headlines. Because in the context, what's happening in the housing market is actually healthy, not toxic. And I say that knowing that KB Homes, which just reported, disappointed some who are looking for better numbers. For a clear head of what's going on, I'm turning to Doug Yearley, the CEO of Toll Brothers, not just because he runs a giant home builder, but because I've known him for years. And when things aren't good,
buddies.
He's always been forthcoming about it, as has his previous boss, Bob Toll. Not that long ago, Doug threw an important and incredibly enlightening analyst day. You can read it online to explain why the housing market's growth might actually be longer term than you think.
This is huge.
Rather than the cyclical boom and bust kind of growth that we've all come to expect. Listen to this. Over the last decade, 6 million less houses were built. 6 million less houses were built than in the previous 4 decades, going back to the 1970s.
Think about that. Think back to 2010. If you were in the real estate industry in 2010, you know people were deathly afraid of building. So these last 10 years, we have not seen builders and developers go take the risk that we need to have the inventory to meet the demand.
He goes on. It's possible that housing is just beginning to recover, given that we have many more people in this country than when we were building more homes, end quote. Yuli's conclusion, quote, it's going to take a long time for this pent-up demand to be satisfied. We think it's going to take years before we ever get back to anything close to the equilibrium that we had seen in a bunch of the prior decades.
If it's going to take years between supply to meet demand, and we're going to continue to print money and interest rates are going to stay low for long periods of time, which many believe and nobody knows what's going to happen, then you're not going to see real estate prices go anywhere. So everybody who's waiting to invest in real estate, waiting on the sidelines because they believe there's going to be this huge drop off on affordability of housing, you are going to miss your opportunity to invest in real estate.
That's right. We used to build 2 million homes a year when we have half the population. Now we're doing half that with twice the population. Now,
that's right. We're doing about 1 million homes a year. 1.1 million, I believe, is going to be about the number in 2020.
If you think that Yearly's just talking this book, and I get that, I am sure the skeptics out there doing that. Why don't we do this? Why don't we go to Stuart Miller? He's the straight shooting executive chairman of Lennar, another exec I have known since he was a young man, and I helped manage his brilliant father's finances when I was at Goldman Sachs. Miller tells us, quote, new home construction cannot ramp quickly enough to fill the void of the production deficit that has persisted over the past decade, end quote. He continues, quote, while some question whether that deficit is 1 million homes or 5.5 million homes, the bottom line is that supply is short and is likely to remain that way for some time to come, end quote.
Most of the numbers I've seen is anywhere from 3.5 million to the high end, the 5 million, to meet current buyer demand of a shortage in homes.
That's right. We literally can't build new homes fast enough to meet the demand. Now, let's say, okay, let's do what everybody tells me has to happen. If Jay Powell raises interest rates, that's not going to create more homes. Even it might push down housing prices by, of course, destroying demand. Then again, it could also make housing less.
Certainly in the lower end of the market, what he's talking about, interest rates going up, you're going to see less demand. Somebody's shopping for, a $200,000 home, a $250,000 home. They're going to be able to afford less. They might get discouraged and just keep renting. You hear a lot of people talk about renter nation. You see interest rates go up. You would say, why do you think companies like Blackstone, BlackRock, these types of companies are buying single family homes at scale?
Affordable by driving up mortgage rates. Hobson's choice to me. But a lot of that demand might be indestructible. If we just give it some time, it'll be good. It'll be a good thing. As Toll's Doug Yearly lays out, quote, there are 73 million millennials who are now entering their 30s and they're buying homes, end quote. Now, this key intellect.
Biggest buyer demographic. Well, we'll cut it off here. I think you guys get the point. You can watch the rest of the Cramer video. But between the amount of shortage we have on single family homes right now, the biggest buyer demographic being millennials, what he just referenced right now, coming into their buying years, when half the millennials still haven't even bought a home, right? You are not going to see demand for homes go anywhere. Zillow, I mentioned on other videos, is talking about this great reshuffling, this great demand for buyers and even baby boomers to be moving to different parts of the country. Is going to create a lot of sell and buy opportunities in many different markets. You're not going to see demand going anywhere. And if we have this shortage of supply continue, you're only going to see prices hold. I believe even, historically, you see interest rates go up 1%. You see home values go up 10%. I don't know that they'd fall that much right now in that environment, just because of how much demand is out there. And if you want to watch the rest of this video, I'll link it below. But Cramer goes on to basically say, hey, this is a good thing for our economy. The housing market doing well is a good thing. It's not a bad thing. It's not a bubble that is waiting to burst. I continue to say that. You're going to see a strong housing market in 2020, probably just as strong as you saw in 2021. So do not wait for prices to come falling off a cliff. That is not going to happen this time around. Appreciate you guys checking out this video. Again, if you like this content, please consider subscribing, and I'll see you on the next one.